Alrighty then. Make sure my uplink is working here. There we go. We're working. Okay. So at any rate, we've basically come from top to almost bottom of this liquidity zone, and we did exceed the 50% retracement. We went down here to the bottom quarter area. Now we're kind of hitting resistance here. Let's see if this breaks down and gives us a quick bearish 1-for-1. Yuck, that's slow. So anyway, let's see if we can figure out what kind of options we can get into. I'm going to try and find the pain zone on SPY, but this is going to be a little bit wide, I think, because of the volatility here. But if we can figure out where that is on a 0-day, we can figure out where the swing would be for legging into a condor that could be like a Friday expiration. Let's see here. Oh, it's not so bad. Put side's down to 406. Where's the call side? Call side's like 419 now. That's actually pretty damn wide. That's like $13 wide. Not worth a condor on a 0-day or a strangle on a 0-day, that's for sure. Not to say you couldn't scalp the options on a 0-day, but they fade fast, man. It's going to be smarter to run spreads with at least a couple days to expiration. Let's see if I can get data on where that would lead us. Let's see, May 12th expiration. That's a couple days. It's Friday expiration. Yeah, you'd be looking at the call side at 420. That's way too far out. Put side. Yeah, 420 dollar wide call side would be opposed by a about a 404 dollar wide put side. I think that's a bit overpriced. I think it should be tighter than that. That's a hell of a range. It's like a $16 range, so it's correlated similarly to the 0-day. See, $16 wide, $13 wide, give or take. Too wide. We like that range to be between 6 and 8. And if it correlates to the spreads that expire in a couple days, running spreads instead of a strangle, that can mean the difference between actually taking a profit from the trade and not, is how wide that pain zone is going to be. It's just essentially those are like the options that are absolutely the most likely to expire worthless, but they're at the threshold of that number. Everything, you know, beyond them is definitely going to expire worthless, of course, but that was the last option in the chain that would be in that zone. Everything between those two zones would be having a chance of expiring in the money. Now, most time you'd look at delta to figure that out. So you look at like anything with a 0.3 delta or higher would have a really high chance of expiring in the money. It's not always the case when it comes to an options equity that's inefficient, and SPY is certainly one of those. A lot of people trade options on SPY, but the people who are actually making the most money trading options on SPY are the options sellers. And even then, for the amount of outlay and amount of risk they have to put into those trades, it's nowhere near as efficient as some equities I've run into where, I can run into a natural yield selling options of 20% or greater on certain equities. I know what I'm going to do with my money. If I was to trade the wheel on SPY, its natural yield would be less than 2% of outlay. That's insane. Why the hell would you risk so much money for a 2% possible return with a volatile market where your underlying shares could just be eaten up by way, way more than that? So I'm not going to take that much risk for 2%. I could do a lot better things with the money. However, I can trade leverage with minimized risk and then make, a very handsome return on spreads. Because of that inefficiency, I can take advantage of that as an options trader versus being an options seller. That's the whole point of why I even mess with SPY spreads, is that the fact is I can get into a range of price movement and be on both sides of it in a neutral position for literally pennies on the dollar worth of risk, and have a chance at making 2, 3, 4, even 500% returns on those. It's like, why the hell not? So compound that with the ability to, instead of just closing positions when they're in the profit zone, you can adjust them and lock in a profit, and then you can have a situation where you're literally paid to take a chance on leaving that position on for expiration, to where if it expires in the money, you could take an even more massive return on your investment. So there's many complexities that can be learned trading SPY options in that manner. Just kind of an interesting thing you can do. And it takes a little seat time. It takes some time to get used to price action first, obviously. But once you've established where your resistance and support are, and you can actually trade the middle from neutral, you got something. Or you can trade the fringe from neutral. You've also got something, because if it breaks out one way or the other, all it has to do is move one direction or the other. The winning side will completely eliminate the losses on the losing side in a matter of $1.50 or more of price movement in SPY. Kind of becomes a no-brainer once you figure it out. All right, so this upstart here just approached the 1 minute 200 period. Kind of working on a possible breakout to 20 bucks here. And RIVN, this will be the last few candles before this will either break out of this bull flag and run up to this target, or reject and run down for retracement to about the 1 minute 200 period, about 15 bucks. Pardon my yawns. I slept well last night, but I'm just like still kind of I might grab a quick cup of coffee and be right back. See you guys in a minute. Every time, guys. Get up for a cup of coffee and wham! Market slams. That's awesome. Well, we did get our bearish 1-for-1, and we actually ended up getting a 2-for-1. And all you gotta do is add a deviation in here. There you go. Now we've got a potential for a trend day. Can almost set this up on a 1-minute chart as well. All right, so RIVN, that flag failed. We're looking for that pullback. Upstart, kind of the same situation, rejected a 200. Pulled back to the 20. However, this one's got a nice little tweezer bottom here, so this could be what a lot of penny stockers would call a quick stop raid, and then they'll let it break out. So this one's actually more bullish than this one at the moment. SPY's kind of making a wedge here. Let me get rid of this fan line for the moment. I want to see where this ends up in our grand scheme of things out to the 15-minute chart. Just a big gnarly wedge right off of key support, right to key resistance within the diamond pattern. And the overnight touched almost halfway, almost exactly halfway between angular resistance and angular support from our diamond pattern. Boom. See, told you. Tweezer bottom. Zoom out a little bit more here. Yeah, if we break down here, we could see this thing cover that entire area right to 409.25. It failed to do it yesterday, but that was still looming because it was out of that liquidity zone right here a couple times. Kept knocking on that support yesterday. Broke it overnight. Ran up with CPI data straight to the angular resistance and immediately sold off. Where have we seen that before? How about right here? So this could be pretty bloody today, as a matter of fact. We might just get a bearish trend day out of this. I want to compare that to SPX real quick. Got all quiet in here. Hopefully everyone's still having a good time.
I'm having a good time.
Awesome.
Just trading.
I always say, like, when I get quiet, like, it's because I'm trading. So we do have the same diamond pattern in effect on SPX. What this does is it eliminates all of the after hours and pre-market data, so it condenses everything. And with SPX, that diamond top is a little more massive than we think. I'm going to draw it, but I'm sure you can see it already. Actually, it goes all the way to there. Let's paint them a different color so we can make them stand out. I got a lot of lines on this chart. Doesn't quite play ball with the support side because it did dip out of that a little bit, didn't it? Right in here. Plus the output side's a little skewed. That kind of sets the picture. We're likely to jerk this back right here to support. Like down here to like 4088 on SPX. Let me see where that correlates with the ES. It's kind of close. ES is at 41.4850 right now. SPX is 41.34, and SPY accordingly 41.25 if you adjust the decimal. Yeah, this could get pretty interesting for the market, because in perspective, let's zoom out. We've had this massive descending channel, broke out of it, ran into a diamond top, and we've got probably somewhere between May 16th and May 19th on the SPX here for this pattern to complete. Being a top pattern, that puts our bear target down here at like 39.64. Just kind of gauging by this trend here. Yeah, it's not like full-on recession bear market status, but in the short term, it's still pretty damn bearish compared to being, bullish before. I mean, we were a bit bullish once we broke this channel. We knew that was coming. We climbed all over that trend. Now we're consolidating for something bigger. Yeah, next week or so, we're going to have some exciting times, I think. We're going to have a lot more volatility in the market. That's just based on what we're seeing. And then, as Kevin was talking about, divergence between SPY and QQQ no longer correlating very well. Same scenario. I mean, you don't see a diamond pattern on Q. It's not there. And usually when these two ETFs or these two indexes diverge from each other, big things happen. Quite interesting, guys. We're probably going to see some serious volatility in the next week or two. Be alert, that's for sure. Alright, we'll see what happens when this wedge breaks for short term for our day trading purposes. I think we'll at least see the bottom of the liquidity zone here down around 410.90. We're back to that 50% retracement area, and we've kind of floated that to be like the middle of this wedge. Oh, damn. They flushed that one pretty hard, didn't they? That was the trade right here to about, 1960 was a good target for that. That just bases right back to the control bar on the open here. I didn't mark it. right here. That'll be kind of your no go area, but it was a nice trade on the
US
brick
DOE
from this
EIA
tweezer
ethanol
bottom.
stocks
Got a full measured
23.291
move
mil
out of that, right to
BBLS,
resistance.
minus
Bam.
0.072 mil BBLS. US DOE EIA ethanol production 965 mil BBLS, minus 12 mil BBLS.
So this whole debt ceiling thing going on, I wonder if that's going to make the market do a lot of fun stuff, or maybe correlate with what we're seeing for the buildup to expected volatility. I mean, in history, they've really only failed to agree, the bipartisan side of things, failed to agree on the debt ceiling once, and it caused a hellacious amount of volatility in the market. Most of the time they'll agree, okay, raise the debt ceiling, you know, kick the can down the road and continue spending more than we're making. Whatever. The point is that this time they're meeting stiff opposition. I mean, you've got the House Speaker basically saying, no, I'm not backing down. And, you know, we got the President saying, I'm going to force this and I'm not backing down either. So what do? File an extension or they default on debt? Who knows? Damn, look at that fade. Whoo, right through support. We know where the keys are and we know where this thing can continue a trend. And from here, we knew these were active. Just keep an eye on them because you might get another opportunity to go long on this thing. I wouldn't say short these, but it is optionable. Anyway, yeah, that might be the key to where we're going with this volatility. We do have some more data coming out tomorrow that might take us back in that zone. You know, the diamond pattern's not done with this price action yet, that's for sure. And gosh, if we get a giant tweezer here on a 2-hour and go right to support, you know, 410.50, holy smokes, that would be like the mother of all sell signals. That could send us through the floor of the diamond here real quick. Let's see, how long does that 2-hour candle have? It's not telling me. Maybe I'm just not seeing it. So that'd be 11:30. About another hour. Okay. Let's have a look at the 1 hour. %, retracement nailed basically on that. Might be able to run this with a strangle after all if the field gets narrow enough. All ranges break and a wedge is just a range compressing into a point. Now let's see what we got. Put side's still hanging at 406 for 0 days. Call side come down a little bit to 417. It's still an $11 width. Remember, I like to see that between 6 and 8 before I go and strangle something, but that's just for best probability of making a profit on the trade. So let me see if I can find a better way to do this. Dang it, every time I go to shift days on option expiration, it's crashing the Robinhood app for some reason. Ah, there we go. On Friday expiration, we're actually wider than that. We're out to, looks like 404 on the put side and 420 on the call side still. You can almost get a dead even $400 butterfly for $1 on a Friday expiration. So if you sold 2 of the 400 strike puts and bought a 401 and a 399, you could get a butterfly for $1 there. You could run double butterflies on it and profit the same way you would on a condor spread, but it's a lot more complicated. Plus, you have to be really nimble to close a butterfly in time. I barely got mine closed the other day and captured, out of that 433% that I had on the screenshot that I took, I was able to capture 425%, like literally seconds after I posted that. Alright, RIVN coming through the 200, so that's going to be bearish right down to 1460 target. UPST looking for a push down to 17 if we break key support here too much further below $8 or $18.10. If you look at the open, that wick on that opening candle is right down to 1789, but the base of that candle is right about where we're at about 1805 here. So wait and see. If it doesn't bounce there, it'll resume right to 17 bucks pretty easily. All right, let's see what else we got here. I'll kind of pick around a couple more stocks and see if we got anything that's really moving worthwhile. And I'll probably call it a day at about 11. There's really not a whole lot to expect here other than this could break and run bearish. I can certainly post some updates throughout the day on that, but hard to say which way this is going to fly. All right, see if we can get the call side worked out here. Yeah, you're looking at 420 on the call side, and that's kind of too far out for Friday expiration. I'd like to see that come down to like 418. Might get my chance. If I can lock in a condor going to Friday expiration and we're expecting some volatility tomorrow, that's great. I can definitely take advantage of that. So right before the break here, I went and got the, I went a little bit outside of range. I went to 402, 400 for a $2 wide. Got it filled at 4 cents, so I'm happy. Now it's worth 8 cents. All right, let me see if I can find us a couple more equities to look at. A couple of bank stocks that are intriguing to me, but I want to wait and see if they find support. And, you know, it's kind of kind of crazy to even be thinking about bank stocks with all that's been going on. But I'm looking for a key support area on a couple of them, and if I see it, I'll call it out. But I'm not seeing any floor yet, other than just fading. So, yeah, and particularly regional banks, we know. I mean, there's a few of them that failed recently. Pretty nuts. Yes, you're absolutely right. The government doesn't have a budget problem; they have a spending problem. They just keep spending. They always seem to figure out how to spend much, much more than they actually have. And they just keep repeating it and kicking that can down the road. So eventually we got to pay the piper on that one. That's going to suck. It's like running up maxing out a credit card that could basically take away all of your home equity. Why would you do that? See, what I'm looking at for a swing trade that's actually working out very well. I picked it up at $1.20 and now it's at $2.40. And I'm running wheel trades on this too, so I'm selling options on this thing. It's open. My cost basis, because I sold puts and got a sign, I sold them in the money. My cost basis is actually 120. I sold those when price was at about 140 at the time, so that assignment was actually great because it got me right below the low, the recent lowest low. Now I'm sitting on them, selling covered calls on them. I've got $3 covered calls that I sold, and this thing is approaching 270. And that thing is looking like a beautiful swing trade because it broke the daily 200 here. And if it continues to run above resistance, which is up here at about 305, we could see this thing run and retrace all of this price action. And we could go for like, $3.50, $4, $5. It's all in the previous price action on that trend. Easy trading. That was a beautiful wheel trade entry right off this little double bottom here. So I'm going to sit on that for a long time. I'm going to try to get that to a zero cost. It's going to take me a little longer because this is, you know, a little bit pricier of a stock than I would see for the amount of volatility it doesn't have. So it'll take a while to get that to a zero cost, but nonetheless, I'm well below current share price with my cost basis on that. Couldn't be happier. All right, SPY put side doing well. Let's see, so far that 4-cent purchase is worth 10 cents. Now we got a target down here about 409.25 for a pivot swing. This is starting to look like a full bearish 1-for-1 outside the channel. You can see your resistance point here was 50% retracement of the previous run from CPI data. That's our leg. We had a leg before that. We got 1, 2. Essentially, hitting that 409.25 would be a 2-for-1. So we've made a 1-for-1 already. I'm in profit on the put side. If I wanted to wrap this up with the call side, I could, but I think this still has a little more momentum left in it. But I do like being able to swing price action into a neutral position going into an expected volatility event. That is probably one of my most fruitful strategies.
Hello, 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 and
Well,
I
howdy.
see that we hit the 41.27 liquidity right below it, and
Yep.
we bounced it right there.
We
Just
wicked it.
beautiful, beautiful, beautiful.
We wicked it and kicked it, baby.
Now look at that. Boom, boom.
So I'm looking at the other half of the zone here. Let's see. 419 is where it's at. I was hoping for 418, but it's not quite there. Looking at Friday expiration call side on the Condor I'm building.
I was tempted to go long right here as we created this nice hammer. We got 2 minutes on this team. 2 minutes on this 5.
We're at like 2 deviations out here from our previous support line. I haven't drawn them. There we go. What the hell? I'm out of drawings again. Look at that. Jeez. It's like it broke one of my drawings but let me hit the other one. Come on. That's just annoying. It pains me to struggle with the simplest thing, you know? I'm drawing a stinking line. Let me draw my line. There we go. Now we got the proper deviation set. So we're looking for rejection off of this guy to come back down and test this guy. And if this gives us a break, we get another bearish 1-for-1. If we get a break above this, we get a bullish 1-for-1 right up here. So this is our new regression line. As soon as that call side of the Condor hits that 418 mark for Friday expiration, I'll go ahead and finish the call side. Anytime I can lock profit in for a day on a Condor like that, I'm going to do it.
How are you building your Condor? Are you able to share that? Because
yeah, so
I did some Condors back in the day when I first joined with SIG.
on this break of this angular support, I was able to grab the put side of my Condor with Friday expiration, $2 wide, and let's see, my point is at bought the 402, sold the 400. I'm a little bit outside of the range I wanted to be at. but I bought it for 4 cents, and currently it's worth 10 cents. So if this resumes to break down to our target down here, it'll probably be worth more like 30 cents. And then I can grab the call side of that condor to lock it in. I'm hoping for around 418, but I might be able to take it even lower if it gets that far down to like 412, 414, somewhere in there. If that works out, then I'll be really locking in some profit. And the idea is to be in a neutral position before today ends so that I can have a position on to trade tomorrow's volatility. So I'm able to leg those condors together based on the price movement. So like I'll wait for it to test that support area one more time right here. And if it breaks to 410.40 here with some force, I could expect it to resume down to that 409.25 area. If it holds here, I'll just close the other side of it, or open the other side of it, the call side of it, and sit in a neutral position with about, realistically, a 6 cent per condor profit margin locked in. So it won't be huge profits, but I mean, you put that in numbers of like, 100 contracts at a time, then it means something. There we go. Now we're starting to fade the calls. No, down you go, you boogers.
We're going down to 41.18 on the SPY, man.
I don't doubt it. Oh, you mean on the ES?
On the ES, yep.
Yeah, I am with you.
41.18 on the ES. I mean, we gotta break this 41.27.
It might even crack down to 41.10, dude. This is looking like a little bit of a double bottom here, though, so I'm a little leery about going shorter.
41.07 is the ADR. I do have an RTH gap open still at 41.14. We never closed that Friday gap.
Right.
So 41.14.25 is the range. So it would be 41.14.25 all the way down to 41.07. We did make a new higher low and a little H type of pattern. Big doji on the 5 minutes before that, like more like a high wave doji.
Right.
That was a very wide range. I mean, it was a 10-point range on that doji.
This is looking very bullish here all of a sudden, though.
Yeah, it is. So that was the fake out. Remember, I said a little earlier, oh, I feel like I'm going long. I should go long in here. And then it dropped it down, made the higher low. Now it's starting to look at a reverse.
Well, these can look bullish like a double bottom until they fail. So these can be a bear flag too. R1 is right here at 411.10.
Because we've seen a number of H failed patterns, which they're not failed to me. Like the H is the hella short,
Yeah, I mean they trade well. It's just you got to factor in that sometimes they hit their targets so fast before you realize it's just bearish continuation. It's too late.
Yeah.
It's like I love the H pattern, but I don't trust it. I know I can trade it from the previous low back up to resistance. No problem. That's done. Easy. But then if you're going to trade this as a double bottom and try to hold that longer through R1 and you got in down here, you're having too much risk on. You would rather enter up above R1 and run it to the previous targets.
You see, my thing is we're right now between those moving averages that you have right there. So that yellow and blue line.
Right.
And we're under. So is that a break? Bear flag forming? I don't know. I gotta
let that 1 minute candle close, because if it closes a wick here and the body is within the mean of these control areas, so if it comes into the middle of it, you'll get a quick support test basically right here, and then you'll get
Yeah,
a
and
bounce back out.
you know, yeah,
So
yeah. So we are wicking on that candle big time.
yeah, it's got 20 seconds left. So if it fades a bar through here and breaks R2, yeah, this will be a definite bear flag, and it'll rip lower for a 1-for-1. But if it holds here and closes that, we got a good chance of shooting back to R1, accumulating 2 bars, and then ripping up to the upside and starting to reclaim some of these. Ho ho, right on that support, dude.
Yep.
This is gonna get vicious real quick.
Yeah, the tape is at 41.31, 41.30, 50. That's it's right there. Boom, 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 boom. A lot of buying at 41.30, 50, 41.25.
Damn, I'm gonna have to settle for that 420 strike on the call side. That's rough. I don't like that.
We're at 11 o'clock, going on 11 o'clock.
I'd rather buy the 418, sell the 420, but I don't think I'm going to get that opportunity. I'm going to have to buy the 420, sell the 418, or the 422. And that's still a little spendy. That's like 5 cents. We're just outside that liquidity zone, and the problem that we're having here with the liquidity is that move's expected if it's a double or a 2-for-1 out of this liquidity zone. That takes us to 420. That's why those calls are so expensive. That's where the market is expecting to move if this resumes up. Downside, though, going down here to 405 is just as easy. So on this pattern, I'm going to make my decision whether I buy the call side to close that position to neutral and let it sit through tomorrow's volatility, or even to the end of the day, I could convert it to a butterfly on one side. Or am I going to wait patiently and let this finish a 1-for-1 and then close the call side where I want it? But when I say close, I mean close the position as a neutral position. So closing the ends of the position. I guess you can almost call this making money on the fringe, because you're at the ragged edge of price action of where it could possibly go. And that's kind of the idea behind the strategy, is that if it goes even a couple strikes out of the money tomorrow, like a day before expiration on this thing, the percentage return on the winning side would be in the 300 to 400% area. So it would completely wipe the losing side if it was a balanced position, if you risked the same on both sides of it. And that's the point. You capture a 200% guaranteed win at that point. Plus, you still have the opportunity to convert each side of those one at a time into locking in profit as well, by converting each side independently into butterflies. It just gives you kind of a buffet of different options, strategies that you can adapt to from an existing strategy or from an existing position. All right, here we go. We're forming the rest of this pennant here. And if this breaks as a bear flag, dude, it will be psycho. It'll repeat this right to here. No problem. If it doesn't, it just forces me to put the call side on and wait for it. Well, I could almost buy back those covered calls I sold on OPN right now. There's a big liquidity gap to 41.46 on the ES there. If it can snap above 41.36, it can make that very quick 10-point move.
Look at that. Boom.
It's right up against that resistance now. Let that candle close. 10 seconds.
Oh yeah.
If that,
We are.
if that rejects here, it's bad. If it holds a bar through there, it's good.
We need to be above 41.35, 37.50 on the ES.
Yeah. We're testing it right now. We're right under the edge of 41.36. All right, we've crossed our regression line on the fan for the 5-second chart there. Made a bullish 1-for-1. This will be the make it or break it here. And we just wicked 41.37 on the ES. 4, 3, 2, 1. We got a doji on the 1-minute chart. Watch this turn into a quick 3-bar right back down to 410.90. Wow. Is it going to give us a bar spinner bar or the end pattern? I'm expecting one of these. Yeah, there it comes.
We'll go back a little.
The 3-bar or the Busby. Man, price action's awesome. All right, holding a hammer on the 8 period. This is actually looking a little more bullish now. It's not confirming a breakout yet, though.
We're squeezing. We're squeezing right there.
Yep. This is one of those.
How's the VIX looking? I don't have the VIX up on my screen yet.
You know, I haven't even been looking at the VIX because it's just, it's no longer correlated. It doesn't work anymore. It's weird. It's like it's broken.
It's been actually quite okay right now. It's really playing, you know.
Like I could pop up UVXY and throw it side by side. That kind of gives us a better clue. Because it's a tighter price action. It's like condensing the ES into SPY by moving a decimal over. Same with the UVXY. Like you could trade patterns on UVXY that you wouldn't expect to trade. We're still squeezing into the end of this pattern, and it will either snap up or snap down.
We're gonna probably snap up.
Think we're gonna snap up from here?
Yeah, that's what I'm saying. I mean, we got at least to make it back to on the ES to 41.41, 41.43, or back to VWAP. That's what I'm seeing.
I mean, it started as a double bottom, ended up with 3 lows. We're just above R1, and we're consolidating.
So it's making this triangle, right? If you squeeze it down a little bit, it's like this ascending triangle, bottom ascending triangle.
Right. I see it.
Yeah. That's why I'm looking at if we do break this up, then we can make it back to VWAP on the ES 4147. So that would be, I don't know, you don't have VWAP on the spot in your top chart. Or,
Nah. Well, this is one of those times where you don't want to get caught in the setup. You want to trade the break. I'll run through this and then call it a day, I think.
well, we do have the 2 o'clock Fed person talk.
Oh, yeah. I forgot about that.
So that might give us some,
They might put some buzzwords together and make us do funny things. Right up against that angular resistance here in the top of our channel on the 5 second. And we're starting to print a doji. There it goes. It hasn't broken really anything yet, but it's just like we're threatening a bearish 1-for-1 here. Unless we break this line, then we can go for a bullish 1-for-1. Well, technically it's a 2-for-1 if you count that part of it. So that would take us to the next deviation. Hopefully it'll let me draw it. It's right here. So about 411.50, 411.60 be the short-term target for a breakout there. And that puts us at 41.40 on the ES. Hammer time right on the 8 period. We're bulls. Watch the break.
So it's 11 o'clock. So there's still a half hour of European session open. And we're approaching the 20 MA on the 1 hour. So, and the 200 on the 5 minutes, which is super flat, right?
Yeah.
But if we break here above the 41.3750, we're going to 41.43.
There's
I do have a pie chart open here.
there's a few sellers coming in on the ES here.
I'll be right back.
While we're above our angular resistance, we're likely to complete that move. Talking about right here. This being a reversal, though, it sets up a new set of trend lines. So like you got this in play. There's your divergence here. So if we break the downward trend here, we can make an upward trend out of this as a reversal. But if we reject here, we can actually continue to be bearish and run this bearish 1-for-1 that's kind of looming here on the 1 minute chart. Another scenario for short term is we have already made a bearish 1-for-1 to the bottom of the channel or bottom of the liquidity zone. 50% retracement takes us back up here.
For 12.50.
But if this is going to be a bear flag with the old pop and drop bear flag like we see here, where it's popped up, this is where it will fail. look at your angular on the 5-second right here. So this is
Are
your
we going to
this is your trend change
Well-
line. If this is a validated reversal, that's your angular resistance for that validated reversal. If it can't break it, it gets slammed right back down.
or are we going to 40, 412, 412.85 on the SPY?
Think so?
See, there's that cluster right there.
Yeah,
We're doing the penny stock. We're doing the penny stock move, right?
right.
Yeah, we're doing that penny stock move. Doom. Now do you see, you have your fan line or whatever that is.
This is
right
angular
there?
resistance for that whole wedge. I see what you mean.
Yeah,
We
and
can
the-
hit that range, right there between like 412.60 and 412.20 in that hole. That's a 50% retracement of the entire day. No problem. There it is. We did
Mhm.
break the angular right here.
Yep. I forgot I had a SPY chart on another monitor here that I hardly look at. See, we broke above the 4137.50 area. And we're very shy of closing this gap down here. But the next one is way up there.
Oh, damn. They're really trying to fade that. The bulls are into it, but man, they're just kind of starting to lose a little strength here.
Mhm.
That body on that 1-minute candle closed right under that angular with a wick. This can give us a tweezer here for a quick reversal down to previous R1. That would give me just enough fade to grab that that balanced call side at 420 on Friday expiration. Pardon.
And we smack onto that angular.
I'm gonna blow it up. There we go.
2, 3.
Well, the bulls caught a breath. But I think this closes a doji. And not in a good place.
Right at the 200 on the 5 and the 1 hour 20 EMA. We're right there, you know.
Yeah.
And right, we touched the 20 on the RTH as well. So that's like, if we're following Allbrooks, he says be a seller when you are under the 20 and you touch the 20, right?
Right.
Just the volume is super low, man. We have, in the last 2 candles, we've only traded 10,000 contracts.
Yeah, it's not very energetic, this move. Bears are starting to take this. Got 8 seconds left on that 5-minute candle right here. And that's right at angular resistance with a wick and a body straight to R1. Bam, closed on R1. Watch the 1 minute now. 1 minute at the 20. I'll highlight the 20.
SVX, right? What's SVX, right? Sig just posted right there a few minutes ago.
I wasn't watching.
SVXY.
Expect markets to follow. I got UVXY here. Pushing down, so market's looking for a tweezer here.
But then trapped in between the moving averages, right?
What's SVXY? That's short VIX. Oh. Short-term futures. Oh, okay. Ah, okay. We could be bulls, but damn if that doesn't have the same descending wedge as SPY does.
All right, so we made it down, and now we pushed back up above that 41.37 that I'm, hammering in here. It's been the swing a little, and we did get a buy signal right there.
We did, right off the 20 period with a tweezer.
Mm-hmm.
That's 1 minute chart though. What's the 5 minute say?
The 5 is troubling with,
Yeah, we're still
with
under the
breaking
20.
above that 20.
And the previous 15 minute candle wicked the 20 right here. I don't know, man. I'm hoping we get a big bearish 1-for-1 so I can lock in that condor and call it a day. Be really neat if I could.
Oh, you know me and being bear, right? But
Yep. Love being a bear.
it's like you make quick moves.
Hey, boo boo. I love being a bear.
Things I've always been burned going long,
Yeah. Same here.
Is
Like I've had situations where I was expecting to be long and then all of a sudden it just fades instantly. But then I realized what I was doing. I'm like, hey, wait a minute. There was a rejection there,
Yeah.
clean and clear. I should have shorted that,
We had a joke before in my other group that anytime I went long, I would see my account draw down by, $1,000 before I would see a green.
Oof. Yeah.
Yeah, it was like, oh man,
Bears get paid faster. Speed kills, but it gets you there faster. Speed kills for cheap thrills. I don't know. Call it what you will. Damn, we just cannot break this 1 minute 20 or 1 minute 8 period here. But we're starting to roll.
I'm always a long-term bull, but a short-term bear. Because
Yeah.
long-term, yes, the markets will be bullish long-term because population growth and the need for more products and use and all this stuff, right?
Right.
There's always going to be that need. But the swings always happen low and low, low and low. Okay, can we make a move? Because I got to join a call in 10 minutes. Can we make a move in here before I have to go back to, earning a keep?
Right. Earning your meager pay.
Well, generating passive income to someone else. That's what I
Yeah, there you go. Making someone else rich. That's a good way to put it.
Well, considering my company president had an earnings of, I think, was $35 million of bonuses last year.
Dang.
Yeah.
Ironclad, congratulations, what's going on, guys? Congrats on the Apex, bro. That's awesome.
Hells yeah.
What's up, Kevin? Yeah, it only takes 7 days. So
Oh,
the
it's
trick.
7?
So the
Yep.
trick is this. The trick is this. So I got funded pretty quickly on that, and then, I figured I was talking to Amy, and she basically said that for 7 days I had to put a trade every day in.
Right.
Yeah.
So every day I went into an MES and
MES.
I just click buy, cancel, buy, cancel, buy. It's like right away,
Yeah.
just that I would have something, whether I made, $1, $5, it doesn't matter. I just went in,
$5.
I did that. Yeah. So that's the trick. Is if you get funded in your first or second day, then
Just make a
you know
few
just
trades.
have to keep the remaining days with a very bare minimum trade so that they give you the stuff. Because I emailed them. I'm like, hey, I'm good here. What's going on? Why don't I get the email? They're like, oh no, you have to wait 7 days.
Yeah, we went over that. I thought it used to be 10, but yeah, no, I went over that with you guys. How if you pass it in like 3 days, you just got to make sure you like put one trade on for the next 4 or something. But that's really awesome, bro. Did you buy just the one eval account, or did you do like the duplicates, or you were just testing the waters?
I was just testing the waters. I just got that one Rhythmic account. Hey, just give me 1 second. I'll be right back.
Got you.
All right, I just forced my condor. Cool.
So what's that mean?
So I was writing a put spread with Friday expiration on that last major drawdown, and then to capture the profit in that, I bought a call side debit spread to be in a neutral position before tomorrow's expected volatility. So essentially, I'm using the profit that I can lock between the call spread and the put spread to give me enough time to hold that overnight to where I don't have to worry about it fading and becoming a negative trade by tomorrow. So essentially, it's having a free neutral position that I can just sit on, and if there's a big move tomorrow, I can capture one side, make a killing. If it goes sideways tomorrow, I can just close it for about a break even or a small profit. Or if it rips the other side, I can profit on that side too. So now I wait.
Got you. Nice.
And there we are. We are reaching that view app 4146. Come on. We hit the last two targets, 4141, 4143. Just a small little push to 4146.
All right. Well, we'll see you tomorrow, YouTube. That was fun. I'll hang out here in Discord for a couple minutes.
Appreciate you